Hello everyone. My name is Ravi. Hope you and your family are safe. Welcome to our YouTube channel. This is our first video wherein we bring some insights on equity markets, impact on your investments, and discuss some interesting investment opportunities. Last year, we saw slowdown and uncertainty worrying the equity markets. As we started 2020, the coronavirus has increased the volatility and uncertainty much more. We are in an unprecedented time. No one has seen this kind of uncertainty in the last many years. There is impact on lives, health, and on our investments. It's been almost 2 months now. We have witnessed how this coronavirus has moved from China to Europe to US and many other countries, bringing the economic activity at a standstill. Equity markets across the world saw a big sell off in the month of March. March 23rd, Indian markets hit the low. Sensex touched 25,638 levels from the all-time high of 42,273. Markets fell almost 39% from the peak. Foreign investors not only sold equities but also sold Indian bonds due to the fear. At the same time, oil prices also fell 66% as there seemed to be a new oil price war between the oil producing countries and the US shale oil. The unexpected lockdown across many countries overnight brought the oil demand at a near halt. So there is clearly recession around. Whenever an economy posts negative growth over 3 quarters, it is termed as the economy is under recession. There's also geopolitics which will take center stage. Come November, the US elections will also give some direction to the financial markets globally. Governments across the world are focusing on bringing down the virus curve. Many countries are still under partial or full lockdown and following strict social distancing measures. India is gradually opening in many cities. Many of the factories and companies will now start at a lower capacity. The number of cases, however, is moving up in the recent weeks, but lesser when compared to other nations. Many companies are working on the vaccine, and the announcement can happen anytime. This may bring a better sentiment among investors. Most of the analysts and fund managers we spoke to think that it'll take at least a year for the vaccine to come. Moving on, the markets, as I mentioned earlier, fell over 30% in March and has recovered almost 15% from the recent lows. Question is, why is the markets moving up in spite of weak outlook and negative news flow? GDP is contracting, consumption is falling off the cliff, and we are in deflation stage. Why we think financial assets will move up? Governments across the world are intervening by announcing big stimulus to keep the financial markets from collapsing. This is a very important concept I think we all should be aware of. Central banks across the world are guaranteeing and announcing huge amount of stimulus, starting with US Fed, which announced 2.3 trillion dollars. The Fed has been buying bonds. Bank of Japan is even buying equity ETFs. Australia's central bank is buying bonds. Bank of England is also doing the same thing. So, what does all this big quantitative easing mean? Interest rates are falling. You recently saw RBI cut the interest rate again last week. That means loans will be cheaper for households and businesses. This is done to incentivize people to take more risk. For example, think about a company which can get easier access to credit to fund their business activities and expand. The idea is to ensure the credit flow continues. All these will lead to stimulate higher asset prices, higher wealth, higher consumption, and investment. This will boost wide range of financial assets. This is something what a portfolio balancing a central bank does for the economy to get back the economy to much stronger levels. The risk-free rate is a perfect anchor for investments. What I mean by this is the risk-free rate is being driven so low that the investors will have little choice but to turn to equities. So this is what we think should work going forward, and all these measures from central bank will actually push the financial asset values up. And some observations we did over the last 1 month, um, something interesting which we observed. People searching for buying shares are much more than people who are searching for selling shares. This just gives the undertone of the sentiments among investors. And some other interesting investment options one can look at tactically. These are thematic opportunities. We think technology looks very strong. The entire technology sector is moving stronger, especially the US tech companies, as more and more people are using technology in the current scenario, be it online shopping, online entertainment, online learning, cloud infrastructure, industrial automation, robotics, semiconductors. All these we think will do well. The second option one can look at is gold. Of course, this is for short term, as global macros are showing weakness. And lastly, I think the healthcare funds also can be considered given the bigger thrust by governments across the world on healthcare. And now the bigger question is, what should I do with my current investments? We suggest you continue your monthly investments, focus on your long term goals. India will take a little time to recover. Diversify your investments across asset classes, across geographies to smoothen out the returns. And if there's anything you want to check with us on your portfolios, do contact us. Finally, it's not a time to be overly pessimistic now. Thank you very much for your time. I hope you all are safe and take care until next time.